Hey, what's up, everyone? It's your boy, Darkpool Algo, and thanks for joining me on another weekend watch list building session. Yes, that's right. Oh, what a crazy market we're in. Today is Sunday, February 20th, 2022, and the markets are not open on Monday. So going into next week, we definitely have a short week. Pay attention to that, right? The volatility, the liquidity, they're going to be all over the place, especially with the news coming out of Russia. Expect extreme volatility. If you've not played in extreme volatility, there's nothing wrong with paper trading it, right? I'll probably paper trade for the next couple of weeks. I'm testing out some new strategies. And whenever I do that, I always switch back to paper trading because there's no reason for me to throw capital at trying something new, right? You wouldn't want to do that. It doesn't make sense. So a little bit about me. I'm a smart money dark pool block trade analyst. I also do some technical analysis. We look for opportunities where we have divergence between smart money and price action. We like to capitalize on that. If you're new to the stream, thanks. I really not to the stream. I'm so used to streaming. I do stream every morning, Monday through Friday at 7:30 Eastern Standard Time. So that's what I'm used to saying. But welcome to the weekly video. So if you're new here, go ahead and take a moment and click that like button, subscribe, and turn on notifications. That way you get notified anytime we put out a new video. So last week we went 4 for 4 with our top picks. So this week we're looking to do the same. We'll get into those in just a few minutes right after this quick intro, and I'll see you in a second. All right, welcome back. I've been digging that new intro pretty much. I've liked it quite a bit. So, like I said, we picked the top 4. I've got an extra stock I really want to look at. Getting mixed reviews from the community. A lot of people are feeling that it's not done with this downside move. So if we have time, and if, like I said, if time permits, we will look at it. So no further announcements or anything like that. Top 4 stocks for this week to have options are LULU, Lemon, Dick's Sporting Goods, Team, which is, I can't remember what Team is, and then Match.com, MTCH. So LULU, Dick's, Team, and Match. Okay. Those are great looking stocks, right? We're going to get into it first and foremost with Lululemon. So, all right. What you're looking in front of you is the FLOWTRADE Flow Index algorithm. It is a smart money dark pool block trade system that tracks large institutions, hedge funds, smart monies, dark pools, and it's created its own algorithm called the Flow Index. That's this purple line you see here. And white bars are price action. Some other things that you may see on my screen would be these blue lines. Those are dark pool block trades. Any red lines would be regular block trades. And if you see a white line, then it's usually a party. But more importantly, it's when a dark pool and a regular block trade print on top of each other. What we look for is areas of divergence where smart money is scaling into positions as price action is falling down. If you were, if you wanted to buy millions and millions of dollars worth of shares, if you just drop that in as a market order, for example, what would happen is it would cause artificial liquidity for price action to increase. And once the dust is settled, price action would actually settle out lower than the price you got in. So you'd be into a negative position. So the way smart money combats that is they scale into positions as price is falling. And then when price hits a bottom, they start selling out of those positions. So they're making money on the way up. Well, that's called divergence. And what we look for is opportunities where this flow index has diverged from price action, like you can see here with Lululemon. Approximately at this level here, right, is where the divergence occurs. There could be an argument for this level. See how price is heading in one direction like this, right? The flow index is heading in one direction and price is heading in another direction. That's definitely areas of divergence. Now, some of this little divergence here might be played out. So it may not be as dramatic as it appears here. Like I said, some of this divergence is played out, but I think that we have an opportunity to get at least 5 to 10, maybe a $5 move off of Lululemon based on this continued net buying that smart money is doing. Okay, Lulu has got a little bit of support here, but they definitely have this little wedge that we're looking to break out. As you can see here, they're resting right on a dark pool level. That should act as support and resistance. It usually will, as you can see how price interacts with these levels. those are key levels. So we usually like to mark those up on our screen. 310.03 is the dark pool level in the last 4 days for Lululemon. We would look for continued strength. However, if the flow index starts turning down and doesn't make a new higher high, and this support gets broken, we can definitely look at playing it to the downside as well. As far as support is concerned, Lulu is currently trading at -1 ATR, which is one full average true range away from the 21-day EMA. We use this as a guide as it provides a lot of support and resistance, and price action does interact with it. Last time Lulu ran into the 21, it sold off pretty hard, finally broke above it, tested 1 ATR, consolidated there a little bit, fell back down. Currently trading at -1 ATR. We've got some squeeze happening here, and this radiant fire is starting to curl around. So we may be a little bit early on this, right? May need a couple more days to consolidate at the lows before it starts making a move upwards. I'm a little concerned that the 50 crossed the 200 and we haven't started making a move back up. We will look at that in a little bit more depth. As far as other standard moving averages, typically this is a very bearish position, but with earnings coming up at the end of March, I think this might be a good opportunity for Lulu to start making a run into earnings. We have a 1, 2, 3, maybe a little bit of a 1, 2, 3 reversal. This is a 1, 2, 3. It's a Dow 1, 2, 3 reversal. We like to call it the Woo reversal because when it fires off correctly, it kind of looks like a W, right? That probably wasn't a good example. Maybe if I were to go like this, it would make a little bit more sense. You got price coming down, up to resistance, back down to support, and then when price breaks above this 2 line, right, you capitalize on that 5th leg move. There's a bunch of different ways to look at it. Some people start with the 0 here, 1, 2, 3, and then the breakout. Okay. We were pretty bearish, but we had a nice healthy pullback to some support. If we break down below the 1 level, or this little supply zone that comes over here at about 300, the psychological level, we can definitely look at taking it down to further support. So don't be bullish if I'm like, hey, it's going to redo this reversal. It can very easily continue to make its move back down, right? It does have some support down here. It's made a low way down here. I'll do a supply zone when I get over to my trend spider chart so we can kind of see what that looks like. From a Keltner channel perspective, this is a 15-minute chart. We are currently resting at the 4-hour Keltner channel bottom. We would look for a move up to the mid and then up to the top, which will also be the daily mid. If we break this support level here of this 4-hour cloud, we have the daily bottom right below us to provide additional support. Like I said, that 300 is a huge psychological level, and we may come down and kiss it and then move back up. ATR about $11.50. So the move to 315, 325, very easy for Lululemon to do. Ready, aim, fire, and we're, like I said, we're kind of in a little bit of a downturn. So either consolidation for the first couple of days, or we get a quick pullback to support and then a move off the top of that. Okay, so just be prepared. If we break 307, we can come down and easily test the probably the 300 level from an options perspective. Equity perspective, 304. Looking at it on our our magic Celts is what I call these. It gives me the Celts off of most of the time frames. We are very bearish, right? So we're looking to catch a bounce, any sort of a bounce off the 4-hour bottom to the mid, to the top. So that'd be a move from 308, 315, 326. Above that, we got the daily cloud, weekly cloud as a magnet, right? So that would be the 333 up to about 344. So that'd be a pretty decent move back up, right? It would also create a pretty decent pattern, ready and fire on the lower time frames. Trying to fire off and get that slingshot squeeze getting ready to happen, right? We did break some key levels we broke some trending support. So like I said, we do have an opportunity both ways with this. Does it come back down and kiss the daily bottom and then move up like it did over here? That would have been a great move to catch. Very similar looking setup that we have going on, right? Little slingshot squeeze getting ready to cross over and release. So very similar to the move back in the end of January. All right, this is a different, you're like, whoa, you just showed me the same thing. This is a more reactive setup. I'm trying to finalize it, getting used to it. It deals with momentum with a lot of support and resistance, okay? I'm trying to work this in a little bit more, but I'm not going to pay too much attention to it right now. And then finally, on my trend spider chart, I promised you I was going to do some supply and demand zones. So if we break down below, I don't know, did we close at 305? Oh, we closed at 308, so we closed up here. We do have a demand zone that runs down here. That could be a magnet, continue to come down, touch that, and then bounce off of it. We do have some resistance overhead, pretty heavy. So let's just look at early in the week move down to about 300, right, as a demand zone, and then a bounce off of that. Back up to these previous highs. There is a supply zone that runs right here. It's real small. Usually the supply zones are about at least an ATR, right? So this one runs 310 to 312, so that's really, really small. I might have to break out a larger time frame chart to get a little bit more accurate with it. Let's look at the 30-minute. All right, so on the 30-minute chart, I would say our demand zone is still about the same, right? This area here. I think that's a pretty decent demand zone from a supply zone perspective. We're kind of in right below one. It remind me to change the colors of these charts because it's really hard to see supply and demand zones based off of it. I would say, yeah, I would look for the demand zone magnet. I'm not really seeing a clearly defined supply zone. So we're going to have to, let's see if I can find one. Yeah, we're just going to have to pass on that. If we had one, it would be up here somewhere, right? Maybe rally it to the 50, testing the 50 up to the 200. That looks pretty decent. Okay. Yeah, so I don't know if I really want to go into much into this. This is an entire new strategy that most of my viewers would have to learn, but we can do just a quick peek at it to see if we can get some options algorithm, right? Some options data flow, kind of bearish, right? Definitely selling way below, but we're coming down to some key levels of support. Remember, we have that bullish divergence. If it turns down, then we have to look at the downside move. Okay, that was LULU. The next 4 or the next 3 will go pretty quickly because I don't have to explain everything that we're looking at. All right, moving on to Dick's. Dick's Sporting Goods. This is pretty decent. Dick's Sporting Goods is in the consumer discretionary sector, and those stocks have done pretty well over the last couple weeks. So we're just trying to make sure that we get a stock, or at least, I don't know what I wrote there, but that's not going to find, not going to find any moves with that. All right, so I've been looking at making sure that I grab at least one stock from different sectors so that we can see where that sector rotation occurs. All right, looking at Dick's, not a whole lot of block trades in the last 3 days, 4 days, 5 days. We've got some dark pool magnets. Right, we've got the flow index making a series of higher highs and higher lows. As you can see, we've got some pretty decent divergence where price is heading in one direction and the flow index is obviously heading in a different direction. As you can see here, that divergence occurred right about this dark pool level 108.77, and there's another dark pool level at 109.92, and then finally the longer term magnet at 111. So 108, 111. Dix has earnings coming up beginning of March. So again, another opportunity for a rally into earnings. Look at this long-term compression. These orange charts are high compression squeezes, right? I'm not sure if this one did fire off. We can definitely anticipate Dix to make a move down to -3 ATR, because when these squeezes fire off, it's a lot of strength and conviction. A little concerned about the 50 crossover, but it looks like the 50 is trying to work its way back up. Dix is currently trading at -2 ATR. So we're looking for that 21-day, 50-day, 200-day magnet to pull price back up to that 111, 111.50 level. And if you notice, we have a magnet, right? 111, 111.44. The 21-day in the 50s, like that 111, just that point of control. What point of control is what? 111, 111.56, right? Definitely looking for that move back up. Rally into earnings from a Keltner channel. Another overall view. This is like entanglement of spaghetti with moving averages, right? This is confusion with the stock. Stocks like to have clear direction. We're currently trading right at the bottom of a supply or of a demand zone, so we could bounce off of that and move back up. We're looking for that crossover. Like I said, rally into earnings, or if we break this key level of support, right? If we blow through this demand zone, we look at the previous levels down at 90, right? So that psychological level, that $100 level, break below that, we come back down and test 90. All right, from a Kelt's perspective, DIX is just chilling at the daily Keltner channel bottom below the 4-hour. What we'd look for is this wedge breakout to propel us up into the 4-hour cloud, up through it, back testing it, move to the 4-hour mid, and then the daily mid, monthly cloud, 4-hour top. That 112, right, is a magnet. If we continue to reject the 4-hour Keltner channel bottom and we break below the daily, right? Like I said, we got to look at both ways with this. The next support we have is the weekly cloud, which is down here about 98, right? That'd be a pretty good move to the downside. If that happens, then most of the squeezes would probably continue to push DIX down to the bottom of the weekly cloud at 92. So we've got some levels here. Looking for the wedge breakout is what we're looking to have happen. Unless this is a bear flag, then we'll definitely know on the break of, let's just call 102, and we look at some downside moves, okay? All right, let me just reset this guy here. All right, path of least resistance is definitely to the downside, but we've got a 1-2 triple bottom. Like, this level is definitely providing some support. All right, from a Kelt's perspective, we sold off and we're just consolidating. That 5,200 crossover was extremely powerful, right? Likes to bring price down with it. Pretty good sell-off, but we're looking like we're going to get a slingshot squeeze, release, and a ready and fire crossover back up to the upside. The safe play is a rally up to the top of the 4-hour cloud, right? That rally up to 105. Use that as support for the 4-hour mid, 109, and then possibly test the 200 at 112. Okay. Oh, dang it. I forgot to pull up the options screen. Maybe I'll do that next. I believe that this white line is VWAP. So currently chilling at VWAP, right? We'll get into that screen a little bit more later. All right. So DIX from a supply and demand zone on the 30-minute. Do I need to go even further out with this? I'm trying to keep it close so we can see price action, but it may not give me enough data. All right, so we rallied up, we pulled back, we held, we broke. So now we're coming back down. Looks like there's a demand zone way down here. Hopefully we don't have to retest this area. All right, but it's there if we need it. That $100 psychological level down to about 97.50, right? So if we get a move down, look for support at this level and a bounce off of that, or we can begin that rally back up to the 50. Point of control is at 111.86. VWAP is at 112. So we have a lot of magnets trying to pull us back up, but we're kind of free falling. So if we see how this slingshot squeeze is getting ready to release, MACD is getting ready to cross over. So we're looking for all of that to push us back up. And then finally, from an options perspective, kind of mixed. Currently, got some bearish. Let's see. Yeah. There's definitely more puts being sold than, or more puts than calls being transactioned. So with DIX, I like it. Again, the target levels would be, if we break this wedge, we're going to go up and test 105, above 105, back test 105 for a move to 109, and then up to 112. Okay. All right. Next up on our list is Team, which is Slack, Salesforce. I can't remember which one it is. So Team. So we had some, obviously we're downtrending. The flow index is making higher lows and higher highs. So we're looking for this trend to continue. I would say divergence possibly around this level. Some of it might have already played out. So we got here, right? Let's look at this as a first target for divergence at 310. We did break below the 300 psychological level, so we look for a move back up to 304 and then 310. Okay, contrarian, right? If the flow index takes a downturn, we have to look at previous support levels, right? Which would be sub 300, so 295, 290, just to keep things nice round numbers. Let me get this pulled up on the rest of my charts here, and wish there's a way I could just sync all my charts to be like, oh, I change it on one, it changes it on all of them. Doesn't work that way. All right. All right, on team. So I'm looking for this 50 to cross back above the 200. Currently trading about a half of ATR, so we have a little bit of room to the downside, right? Like I said, if we crack that 300 psychological level, we've got support at 275. Team moves on what, $22 a day. So yeah, we got to look at this support, right? We got point of control at 265. There's a demand zone that runs. It's about 275 to, let's just call it 275 to 290, right? There's a demand zone there. I'm sorry, supply demand zone. Yeah, so we may come down and kiss that and then bounce. So we may have to hold through a little bit of a downturn, but there's a move to the downside. We can play the downside and then catch the bounce, move back up to the up. Look for this 50 to cross back up and over. From moving average perspective, that cross down didn't help our case. Broke trendline support. Like I said, did it fill this gap already? So this gap up has been invalidated. Bounce off of it, pull back. Do we continue up or do we come back down and test this gap, right? So like I said, there's a supply zone or demand zone that runs about 275 to 295. Let's just call it that, 275 to 295, which is where we're at now. We can either trade down to 275 or we can bounce off of here. Okay. All right. From a Kelt perspective, we are in the weekly cloud, right? Below the 4 hour, below the daily mid. So like I said, the move down to the daily top, down through the weekly cloud to support. So that move down to, I've got 285 here or 275. If we continue down through the daily, then we get the bounce. Okay. So maybe a little bit early, but there's definitely a move there, right? 297, 285, 275 to the downside. If we get a rally and break through, right, up through the weekly cloud, up through the 4 hour Keltner channel bottom. So a move up above 300, 305, use that as support. We would immediately test 314, 317, right? Above 317, we get real smooth move, right? All the way up to about 330, 335. Okay. Broke the 4 hour, broke support. Like I said, there may be a magnet down to about 285, right? Possibly 275 for support. But that's a $20 move. You should be able to catch a little bit of money off of that. All right. All right, demand zone. Let's say let's go 274 to about 287. Maybe a little bigger than that, but I like this move, right? We got point of control at 290, 293, back down to support, 285, 280. May test lows, but then we get a nice move. So in front, initially in the week, magnet down, right? Find support, pull back up. Okay. All right. Again, very bearish sentiment from an algo or from a options algorithm flow perspective, right? Low IV, bearish sentiment, way more calls versus puts. All right. You see what I'm saying? Trying to think like the big boys and get into positions as they're pulling back so that when they hit bottom, we can scale out on the way up. Okay. All right. Last one that is going to be for the top 4 stocks this week. We may do a bonus one. I'm going to check in on time here in a minute and see how things are going. All right. Last one up on our list is MTCH, which is match. Flow index is making a series of higher lows and higher highs, definitely increasing. That's a pretty significant point of divergence, right? 117. We have a regular block trade at 111. It came down. Did we find support? There is a little bit of a demand zone that's holding us up right here. Rally up, back test. Do we get the move back up? Right? Does the flow index pull us back up? Or do we come back and back test one more time? Not seeing any. There's no dark pulls in the last 5 days. So that 111 is definitely going to be a magnet. Let me get these pulled up. All right, so I wish I could just create one giant magic chart that I can switch things on and off. So maybe I'll work on that. Long 3-day weekend. Obviously Monday the markets are closed, so everything's going to be a short week. Okay, 111 magnet. 105, 106 support. Currently trading at 107, which means that we are at 1 ATR away from the mean. We have a high compression squeeze. We're below the 50, below the 200. If this breaks, right, if this little demand zone here breaks, so we break below 105, 100 is going to income pretty easy. So we can look at it initially to the downside, about a $5 move per day, right? Is this a double bottom? I mean, is it a 1, 2, 3 reversal? Or do we blow through this demand zone and look at previous support, which would be, right, there's a zone down to about, there's a zone down to 100, so we could do the 107 to 100 move, look for support below 100 psychological level. We get a larger move down to 95 to 90, right? If we bounce here, like we did here, right, we have that opportunity. So we have the downside, we have the upside. Any argument for the upside would be we're at the weekly cloud bottom for support. This is massive support. We can go back up through the 4-hour and then back up to test the mid, or we reject here, break this, and we come back down and test the daily cloud at 105, and then through that to 100. Okay, getting a lot of bearish push. We're getting a lot of weight pushing down on us. This is a key level of support this weekly. If we break the weekly bottom, right, we're definitely setting up for this large move down. Okay. However, if we hold, we get a pretty decent retracement back up to the weekly cloud top. So the levels are below 106. We hit 104 for a move down to about 101, right? If we hold support here and we start moving up, right, there's a move up to 110, then back test for a move back up to 113 or 114. Okay. Another perspective here, big old wick came through, back tested. Usually when we back test the bottom of the 4, we move down to the next Keltner. So that 100 or that daily will be a magnet, but we might get a little bit of a crossover, right? Again, looking at this, very, very heavy, very, very bearish looking, trying to catch bounce. All right, back down, up. That is a huge, massive demand zone. Didn't even realize it was that big. So there it is, 105 to 99. Like I said, that downside move. If this 50 bounces off this 200, we have VWAP at 114, point of control at 115. That could pull price up with it, right? Looking for that TTM squeeze to release, MACD crossover. Okay. It looked like it was trying to do it on Friday. This also could be a bearish play. So we'll know early Monday what's going on. Got a little bit of bullish algo flow at the end of the day, right? That's what I'm saying. We might get a bounce here. All right, that's it. All right, I'll do one more real quick, just because we have time, and it was Shopify, right? There's a lot of sentiment that Shopify is going to break the 666 level and continue to move down, even though the flow index is making a series of smaller, higher highs and higher lows. We're at dark pull support at 667 or 657, right? Dark pull support. We've got a dark pull at 707 and then another one at 750. So there's support, magnet, higher lows and higher highs. Divergence played out there. Got fresh divergence up to 707. All right, just some real quick other views of shop, not hop. All right, let's see what we got going on here. All right, the bonus play, right? Shop is trading at negative 2.5 ATR after a bad earnings, right? So there's that opportunity, definite opportunity for it to crack, right? Crack this zone right here. There's a demand zone right here that runs 596 to 662, right? Right there. Okay, I'll mark it up when we get to the other calendar, right? So we either bounce here and we move up, or we get that larger move down to previous high, previous low, right? But below 596, it gets real ugly. That's what I'm saying. It's either do or die time, right? So we've got decreasing squeeze, looking for that slingshot, steadily higher, ready aim fires. Big drop, big old gap down. Is this a doji reversal right here that we see for at least a rally back to the 21, right? Fill the gap to the upside. Said this is why I wasn't like, oh, chop's an easy looking play. We're at the bottom of the monthly Keltner channel. That is like the last line of defense, the strongest level of support. We're chilling there. We're consolidating there. Do we get a slingshot squeeze release and get a move back up to the daily bottom? 695. Trade through the daily bottom cloud to the daily bottom cloud top, right? So for our bottom, right, up to the daily bottom. So that move would be 695, 711, 734, right? Can we move that up here, back test, and then move up to the 4-hour mid, monthly cloud top, 770, 780, right? Or do we break this level of support and make a larger move to the downside? Okay. Big moves down. Like I said, this monthly is really what's holding us up. Depending on where you look, we're at the monthly cloud bottom. Boom. So that would be free fall for a shop at that point. Okay, let me see if I can get enough. I'm not going to be able to get enough time on this one to show you this supply zone. All right. I mean the demand zone. So we have a demand zone that runs, it's real small, right? Basically there. We're in that demand zone now, looking for a retracement back up to the 21, right? We retest the 21, we get a larger move downside. If we trade to the bottom of this is 550 or 560. So from 650 to 560, it has a $100 ATR, so it can definitely do this in a day. Below that, we trade this entire zone right here. There's no real way for me to show you other than if we break down below that, we trade the down to 315, right? So it gets real ugly real quick if they don't find support quickly. All right. Options are bullish, right? People are buying this dip, is what this is telling me, right? They're buying the dip. All right. That's it. Thanks for joining me. Really appreciate it. I'm going to go over the overall market real quick, just so that we can get a sense of where things were on the close of Friday. Okay, this is the ES. We close below the 382 retracement from this low to this high, right? That means that we could set up for another move back down to retest previous lows. There's a gnarly little supply or demand zone right here. Let me see if I can find it. Basically, that runs 42.50 up to 43.17, right? So like I'm saying, if we continue to sell off, we've got 42.50 as support. Below that, it gets super ugly. We'll be in a downturn, okay? Let me show you what the NQ looks like. I've got March 16th pulled up as a line on the chart so that you can see what we're looking at for a move to that March FOMC meeting, right? Right there. So rejected the 200, came back, broke through this tree line, right? Broke the 382. We're now trading in this little demand zone that runs right here. If we continue to trade down through it, we've got the snow line as a magnet at 13,457, right? Can get real ugly real quick. This would be a good retracement opportunity, right? However, we broke key levels, right? We broke our trend line support. It can get real ugly. A lot of this is going to be news based. So let's see if I can just bring this out a little further to show you what's going on here. Basically there, demand zone. Okay. Looking at the rest of the markets real quickly, we're going to look at the Dow and then the Russell. Very similar move all the way across the board. We've got a fire line down here at 33,621. That is going to be a magnet if we break these previous lows. All right, we're in a demand zone currently. All right, let me see if I can just quickly draw it. We are in a demand zone where people should be buying shares right now. The next one is way down here. Okay. So we're going to look for a bounce back up. If this 21 crosses below this 200, it can get real heavy real quick on the Dow. And then finally, last but not least, is the red-headed Russell. All right. So from snow line to tree line to snow line, rejected, right? I think we backtest this broadening wedge. I don't know what you call it. Retested a support. Could possibly double bottom here for a move back up, right? We've been very bearish on the Russell for quite a long time. We're in a demand zone right now, right? We're at the very bottom of it, actually. So if there's a retracement point, it would be here. If not, then we trade back down to the snow line here. I'm trying to show you what that looks like with this over here. This little demand zone that we're in. Basically right there. We trade down. Like I said, the snow line is a magnet. Unless we can get back above 2041, we can look at possibly back testing down to 1915 and still not make a new low. Okay. All right. Well, that's it for me. Thanks for joining me. I know I went a little bit over time. I do appreciate it. I stream every morning, Monday through Friday. If you have any questions, hit me in the chat in the comment section below, and have a great weekend. Hit the like button on your way out the door. Share this with your friends, families, coworkers, neighbors, or anybody that you think would be interested in learning more about how to trade the stock market. Thanks and have a great day. We'll see you soon.